Good afternoon and welcome to our Academy Forum. We have a full agenda today, and so mindful of your time constraints, we will ensure we stick to the time slot and we should finish by 1:30. So I'm Michaela Johns, one of the directors here at HWB, and I head up the Academy Schools team. Our speakers today also specialise in academies, and I'll introduce them to you in a minute when we go through the agenda. Some practical points though before we start. Please put any questions you have in the Q&A box and we will answer them as we progress at the end of each section or at the end, dependent on time. You will see obviously your cameras and microphones are switched off unless you're presenting today, and the presenters will switch their own cameras and microphones on as and when it's their turn to speak. We will, of course, send you the slides and the recording, which will go up on YouTube probably by the end of the week. So you can then share that with your colleagues and your trustees if you want to. We have put in a couple of interactive polls into the seminar today. So you'll see on the screen there a QR code. If you want to scan that in on your mobiles, then you'll be able to partake in some of the questions that we're raising today and see the answers come up live in front of you on the screen. It is totally anonymous, so please feel free to join in. So, onto the agenda slide. Just wanted to talk you through the order. So, Matt Cooper will cover the Academy Financial Handbook, the main changes that came into effect from the 1st of September this month. Gemma Wood, who many of you will not met yet, is going to speak on the changes and updates around related party transactions. Gemma is one of our audit and accounts managers, and her role is very similar to Alan Davies, who I'm sure you all know. But yeah, some of you might have had interactions with Gemma throughout the audits already. I will then go on to talk you through about internal scrutiny reviews, and then Stephen Hughes, who has taken over heading up our grant audits for teaching schools and hubs and skits from Matt, will take us through the changes there this year. We will then go back to Matt to pick up on the changes on financial oversight, and then I will cover some brief deadlines that you need to be aware of for your diaries, and then touch upon some recent changes so that you can start thinking about them for the future. And as I said before, in between, we'll have a couple of polls. So I thought we'd just start with our initial poll on the next slide. And this should give us a good feel for how everybody is feeling about this year in comparison to 23-24. So how has it been for you? Easier, harder, about the same, or you don't know the detail? Um, I think we kind of know what answer we're going to get, but hopefully it just gives us an idea on how you're feeling on the ground, dealing with juggling budgets all the time. Yeah, so I think as we thought, the poll is quite a way up front on yes, you're all finding it harder this year than the previous year. I think a lot of Academy trusts have used up reserves, and therefore that's probably why you're feeling the pinch. Okay, well, thank you for participating in that. We'll make a start now with Matt. Thank you.
Lovely. Thanks very much, Michaela. Good afternoon, everyone. So, as a brief introduction, I am Matt Cooper, one of the associate directors here at HWB, and I work alongside Michaela and the rest of the team, specialising in the academy school audit sector. So, yeah, to start things off, I'm going to go through a summary of updates to the DfE's Academy Trust Handbook, or ATH, which was released on the 25th of June earlier this year. And it was also released alongside their schedule of musts, which I've started doing recent years on one Excel list. Typical timing. It's actually released the day after our forum back in June. So you're obviously not able to use my crystal ball last time round, but nonetheless, we'll cover it today. Also covered this at our trustee training last week. So for those that attended, they should all now be aware of these changes and how this affects them as trustees in their governing position. As for today, I'll take a slightly different angle, obviously, and run through the operational aspects from these changes for your roles as CFOs and school business managers. And yeah, just to mention quickly, I use the terms like CFO, head of finance, SBM, like all interchangeably, but essentially referring to the same role. Everyone on today's forum. So yeah, it came into effect from the 1st of September 2025, covering the 25-26 academic year, which was actually released about a month earlier than last year, which was quite helpful. Gave everyone, including us, yourselves and your trustees, a bit more time really to review it ahead of the new term starting last week, which I hope has gone nice and smoothly for everyone. It was an exciting first few days back. Slightly strangely this year, it's only been released in HTML format online rather than as downloadable PDF, which is a little annoying, but we can still access it nonetheless. Um, Again, I'm sure everyone all aware of what the handbook is, but in general, it kind of describes the rules, if you like, of the financial and other responsibilities and requirements that academy trusts must adhere to in accordance with their funding agreement. Primary users of the ATH are those with responsibility for governing, which will be your trustees, managing, which is yourselves, and then auditing, which is where we come in. Um, DfE, again, have deliberately limited the number of changes in this year's edition, follows the same theme of the last 2 or 3 years, just to assist with some stability, which I'm sure everyone on the call is not averse to. So yeah, therefore, just going to start by summarising the main changes really in the ATH, along with what we would deem to be sensible approach for you to take as CFOs in response to these changes. Okay, so firstly, regarding the roles and responsibilities, it just reminds trusts that they should have an understanding of and be working towards meeting the 6 core digital and technology standards by 2030, which I know feels a long way off, but I'm sure it'll come around quicker than we think. So, therefore, kind of suggested action here that you evaluate your current digital infrastructure and begin or continue planning to meet the standards ahead of the 2030 deadline, which should be done in collaboration with your IT leads to ensure financial planning supports your trust's long-term digital goals as well. There's also further guidance included with regards to estates management, a hot topic last year. So, along and with regards to estates management, and then along with that, there's also kind of an update to the accounting officer duties with respect to high standards of property and the management of public funds, and then kind of new or at least updated definitions for regularity, propriety, value for money, and feasibility. So on this really suggested action here is to review the various supplementary guidance included within the handbook relating to estates management, um, and incorporate any relevant recommendations into your financial and operational plans, just ensuring that kind of any procurement and estate strategies reflect best practice and regulatory expectations. So the type of guidance included, includes the DfE School Estate Management Standards, the Estate Management Competency Framework, the CDC, so the Condition Data Collection, and then also guidance on capital funding. So if it's larger mats, then SCA or CIF, the Condition Improvement Fund for all others. Okay, so secondly, with regard to the main financial requirements, so that is the inclusion of further guidance and support and procurement. So for you as CFOs here, a review of this would be beneficial as covers the musts in relation to procurement. For example, kind of one decision to represent value for money, a competitive procurement procedures in place, which is included within your trust financial framework. And then thirdly, kind of appropriate due diligence is in place. So all normal stuff there. And then further to this, take a look at what the DfE consider as opportunities when making purchasing decisions. They include their guidance and support on buying for schools, along with their FBIT tool, so their financial benchmarking and insights, so that you can compare costs against other schools. I am wary that some people have mentioned in the past that tool's not massively helpful, but I think it's, if not done already, then kind of worth a look to see if there's any underlying themes which could be explored, which you could then build into your decision-making process. As obviously, within your trusts, you'll know all the intricacies relating to your own schools. Second main financial requirement is in regard to setting executive pay. and I'll touch on that a little later as well. This is where the handbook has clarified the board's role in this regard and reinforced expectations around how academy trusts determine and justify executive pay. So your boards, and I covered this last week, um, therefore must ensure decisions about levels of executive pay. And when we say executive pay, that includes salary and any other benefits as well. So it's important to make sure it includes like the entire remuneration package. So yeah, it's important that it follows a robust evidence-based process and are aligned, and are reasonable and justifiable reflection of the individual's roles and responsibilities. So as CFOs then obviously would therefore suggest that you ensure all executive pay decisions are supported by benchmarking data, which you'd compile and prepare along with documented rationale behind the report that you'd present to your boards for approval. So thirdly, in relation to internal scrutiny, there's no changes to the income thresholds, i.e. that 50 million revenue limit, which has been in place for a couple of years now, but it has clarified where that 50 million figure comes from. And they've clarified that it must be taken from your trust's last audited financial statements. So this affects whether a trust must have a dedicated audit and risk committee, and whether or not your trusts must deliver internal scrutiny, either in-house or bought in, which Michaela will cover shortly. So therefore, really the only change here is where your trusts may be getting close to that size limit. It's just making sure that your policy is updated, or it includes where this 50 million is taken from, and that it's from the latest audited financial statements as opposed to unaudited or your own management accounts. Moving on to delegated authorities. So there's an update to the section on novel, contentious, or repercussive transactions. The change this year is explaining how cost could cause a transaction to be repercussive. If a trust's proposal could cause additional costs to arise for other parts of government. So here, um, as a kind of a theme throughout, there's lots of additional links included within, which gives some nice nighttime reading. So we've added a link to the latest 2025 version of HM Treasury's Managing Public Money, so MPM document, along with the DfE Good Practice Guide in this area, which was published in March, and we covered it at our June forum. So recommend here just ensuring you and your trusts are up to speed in this area, especially with DfE's new Good Practice Guide, which is obviously more focused on academy trusts. And then lastly on the ATH changes, relates to deregulator and intervention. So there's a few updates in this section. So firstly is confirming that trusts must not pay any cyber ransom demands. As the DfE supports the National Crime Agency's recommendation not to encourage, endorse, or condone the payment of ransom demands, seeing, the payment does not actually guarantee that it will restore access to lot data and could likely lead to repeat incidents. They've provided a few helpful links for reading up, which we'd recommend, including action fraud form for the police, and then the Charity Commission's guide as well on how to protect your charity from fraud. Then within the oversight, support and intervention section, they've added a link to their newly published guidance called Financial Support and Oversight for Academy Trusts, which I'll cover on a separate slide a little later. And within the intervention power section, they've removed educational performances as one of the areas where a notice to improve may be issued. Also, the DfE are currently focusing on oversight, support and intervention, and their new regions group, which replaces the regulatory role previously undertaken by the ESFA. So this new regions group will be taking a more active role in monitoring financial health of trusts and intervening where necessary. So it just from the DfE are therefore encouraged to engage early if any financial risks emerge with this focus on collaboration. So here, therefore, it's important that you continue to regularly maintain your financial risk assessments and risk registers, which is nothing new, and then also initiate early dialogue with the DfE if you do have any concerns. So we've also mentioned at previous forums and throughout the actual audits themselves. So really, it's ensuring that your financial budgets and forecasts are realistic, including the assumptions used within them. As the title suggests, they are budgets, they are forecasts, so they're unlikely to be 100% accurate for all the different income and expenditure streams. However, as long as thought has been given and research completed from reputable sources, um, like the SCL 3-year budget planning assumptions, then, there's not going to be any penalties if the actual outcome ended up being different from budgeted. especially when it comes to the more than 1 year budget, where obviously there's a lot more uncertainty going into the future. Then, lastly, in terms of recovery of funds, the DfE have also clarified its right to recover funds in cases of fraud, irregularity, or misuse of public money, which places even greater emphasis on internal controls and audit readiness coming into this season. So, for this, would suggest you review your internal financial controls, continue to ensure that all transactions are properly authorised in accordance with your policy and recorded appropriately within your accounting software. And then also, where there are any relevant audit findings, relating to these kind of financial processes and controls, either from external audit or internal scrutiny, then again, as have been doing previously, just ensure these are addressed adequately and promptly. Okay, so yeah, as you can see, the changes in this year's handbook, along with their new financial guidance, which we'll cover later, really focusing on what the DfE deemed to be their key areas this year, outlined in the accounting officer letter released in June. So, and as you can see there, like the main themes, so these are executive pay, digital and technology standards, oversight support and intervention, and then finally recovery of funds. Slightly different order. So yeah, quick run through the handbook changes this year, which have been summarised on a fact sheet which we sent out early in the year, and then again we'll send this out later in the week. Um, and then yeah, like I said, you notice in the ATH changes document this year, we've aligned it with these kind of key themes of these changes. And then we've also split out kind of various suggested actions between yourselves as CFOs and then also kind of your boards. Obviously, there's going to naturally be different work required between you. So you can kind of see what areas would suggest kind of depending on the role that you're in. So that's a quick update on the handbook. Obviously, if there's any questions, please do kind of pop it in the chat or just reach out to your relevant kind of director or manager here. So yeah, thanks so much. And I'll now pass across to Gemma to do an update on related parties. Thank you.
Thank you, Matt. Good afternoon. So, today I'm going to talk to you about the recent changes in how Academy trusts are to deal with related party transactions. This is an area that has become much more tightly regulated in recent years, with new requirements aimed at improving transparency, accountability, and ensuring that public funds are used properly. So, what do we mean by related parties? A related party is anyone who has a close connection to the trust. That might include persons and entities with control or significant influence over the Academy Trust. Members, trustees, or local governors, and key management personnel. Close family members of those individuals, and companies or organisations in which have a significant interest. In other words, it's about situations where someone linked to the trust could personally benefit from a financial transaction with the trust. So, what is a related party transaction? For any related party transaction, the requirements are the conflict of interest needs to be managed. The transactions must be in the trust's best interests. The benefit to the trustees or related party must be authorised. Examples include sales of goods or services by the Academy Trust to a related party, payment by the related party for use in the Academy Trust's property, purchase of goods or services such as IT, music lessons, trades, or even marketing, plus employment of a related party. So, what has changed? There are three main changes Academy trusts need to be aware of. Firstly, pre-approval from the ESFA. Certain related party transactions now require prior approval from the ESFA. This applies when the contract is for goods or services above £40,000 individually or cumulatively in any financial year. Secondly, declarations and reporting. All related party transactions must be declared in advance through the ESFA's online system, even if approval is not required. Trusts need to record the nature of the relationship, the value of the contract, and provide assurance that the arrangement is at no more than cost when applicable. Thirdly, strengthened at cost rules. Transactions with related parties must not allow them to profit from the contract. They can only charge the trust for the cost of the goods or services provided without any markup. So, why have these changes been introduced? The main reasons are to protect public money and ensure it is used to benefit pupils, not individuals. To increase transparency in trust finances so parents, staff, and regulators can see how funds are being spent. And to reduce conflicts of interest, making sure decisions are based on value for money and not personal gain. So, what does this mean for academy trusts in practice? Trustees and leaders need to maintain a robust register of interests, making sure it is regularly updated. Before entering into any related party transactions, they must check whether ESFA approval is required. Good record keeping and internal scrutiny is essential. Finance committees should review these transactions carefully. Staff across the trust should be made aware of the rules so that potential conflicts are flagged early. So, in summary, the rules around related parties have become much stricter. Academy trusts must now declare and in some cases get approval for transactions and must be able to demonstrate that these are at cost and provide clear value for money. While this does add to the administrative workload, it ultimately strengthens governance and helps protect the reputation of the trust. Thank you very much for listening, and any questions, pop them in the chat box and we will respond to them there.
Thank you, Gemma. So yeah, no questions as yet, but please do put them there like Gemma said. So I was just going to cover today internal scrutiny. So all of you should now be in a position where your internal scrutiny reports have been completed for the year to August 25. And these reports, of course, then go to your audit and finance committees, and some of them would have already seen them, and others will be scheduled to see them. So the results of these reviews that you've had done during this year may help you then plan what you're going to look at and plan to look at in 2026 year end. So the next action is that the results of these reports are now needing to be written into an annual summary, which is then approved by the trustees and then put together ready with the year end accounts to be submitted to the DFE by the 31st of December 25. The DFE are now putting much more emphasis on these internal scrutiny reports and the whole process. It's seen as good practice, and the lack of these reports is now also being reported on in some of the notices to improve that you see going up on the DFE website and are published for everyone to see. It's very much seen as a part of the sort of good governance piece. So I think now is a good time to review your current internal scrutineer and decide if you're staying with them, if you're moving to others, or you're looking for some sort of specialist report on a particular area. I want to remind you here that your internal scrutineer cannot be the same as your external auditor. And also, if you're a MAT with income of more than £50,000, there is also another restriction on your choice of internal scrutineer. So just be wary of that if you're of that size. So you should be thinking about the areas that you might want to cover, be it cyber, payroll, estates management, governance, and just a reminder that it must cover both financial and non-financial areas. Overall, this is overseen by the Audit and Risk Committee and very much driven by your risk register And as we all know, that changes year on year, new things come on, old things get dealt with. And so it's good to just make sure that the two marry up and the plans are clear as to why you've chosen the areas that you've chosen. So the suggested timetable of work for your internal scrutiny, I would say, is sort of November, December of each year. The Audit and Risk Committee meet to review the risk register and agree a programme of works for the coming year. That then gives you time to then try and get people that are right for the various areas of the report that you want done, get some quotes for the costs, and then for the work to be undertaken possibly in the spring term for your first review. And that then gives time for any points to be followed up upon. And then another second review in the summer term. And then usually autumn term is spent looking at those findings, writing up the annual summary, and getting ready. There's no actual guidance on, how many reviews you should have done a year, or what areas. It's very much for you to decide and justify that within your own academy trust. The final point there on the slide is around sort of good governance. And the DFE obviously see the internal scrutiny reports is another way of another individual or organisation looking at your academy trust's records, systems, and procedures, and giving an independent view on it to ensure everything is as tight as it should be. So I thought it'd just be interesting to know on our next Slido poll, how many internal scrutiny projects or visits did you book in the last academic year? I'll just give you a few minutes to fill that in. Um, I think we know what we think the average is, but you never know, it might change year on year depending on what you've got going on in your trust in that year. Yeah, so 2 or 3 is coming out is the main numbers, and that is quite common that we see in our client base. And I think it's about weighing up, obviously, the cost versus the benefit. And so we all know budgets are tight, so it's about justifying what comes out of those reports. So yeah, now we've got a fairly even spread, 44% for 2 visits and 44 for 3. So, okay, we'll move on to our next speaker then, which is Stephen on teaching schools.
Okay, good afternoon, everyone. Those of you who don't know me, my name's Stephen Hughes, one of the audit seniors here at HWB. And as Michaela touched on at the start, I've now taken over responsibility for the teaching schools, the Annex G returns from Matt. So kind of any questions to do with Annex G returns, if there's anything that the DfE have asked the trust for like an Annex G return, then please feel free to get in touch either with me directly or through your audit director, and then that can get passed on to me. So there's been just a couple of changes really in the sort of the last 12 months or so. So I'll just give a quick update really where we are on these changes. So just going back a couple of years, teaching school hubs decided or replaced the previous network of around 750 teaching schools back in August 2021. So kind of condensing from those 750 individual teaching schools down to 87 hubs, which essentially, amalgamate the individual teaching schools within. And these are all now managed and overseen by the Teaching School Hubs Council. So just going on to kind of Annex Gs in general. So a vast majority now of the Annex G returns have now fallen in line with the academic year. So for consistent reporting then within the annual financial statements. And then there's a couple of various deadlines that the DfE have set out. So the main ones being, so those like hubs which are focused on English, So English hubs, the deadlines for those are due at the end of this month, which is the 30th of September. Following on from that is the teaching school hubs themselves, which usually have a deadline of around the middle to the end of November. Same with maths hubs, and then kind of anything else which usually needs an Annex G return, which includes ICT or initial teacher training, also school direct funding, kind of any other ones like those are then usually same as the audited financial statements, which is the 31st of December. Any questions at all with the deadlines? Yeah, please just let me know. So the main change this year is kind of a continuing movement from the DOV is ITT reform. So the initial teacher training sort of scheme in itself has been going through quite a large reform with changes in the education programs for new teachers. So this is essentially now stage 2. So they've moved on from ITT reform setup funding and are now going through stage 2, which is now ITT reform delivery. So the recent guidance was published on the government website back in July. And this is kind of in response to support the delivery of recommendations that have been set out by the government in response to the recent ITT market review. So accredited ITT providers, you can claim funding now from as of the end of the recent 24-25 academic year, as long as various conditions have been met, which have been set out by the DOV. So there's 3 kind of sub types of funding surrounding this delivery grant at this stage, which is lead mentor / mentor leadership teams, intensive training and practice, as well as a general mentor training grant. So in addition to the standard T's and C's, which are kind of issued by the DOV, there's an additional ones which need to be met. For example, they need to have started or returned to their ITT course between the 1st of September 2024 and the 31st of May 2025. These trainees also have to be on either an undergraduate or postgraduate course, either be in full or part-time training, as well as being on a course that will lead to QTS, which is qualified teacher status. So essentially, as I kind of mentioned, the funding can be claimed as of the end of the 24-25 academic year. There should have been some correspondence from the DOV to those who are eligible for funding, with payments due to be made between kind of now and the start of next year, being around January, February 2026. Once all the funding has been issued and expenditure incurred, Annex G forms will be set out to the various providers with a deadline to submit by the 28th of March 2026. The DOV will confirm at the time of issuing whether a assurance report / audit will be required for the Annex G return. So the costs of an audit / assurance engagement is classed as eligible expenditure and can be claimed as part of the Annex G. If an audit is required, the form that will be issued will be the Annex GI. If it's kind of a self-declaration form where essentially you just put the figures together and then submit the report to the DOV, then this will usually be classed as an Annex G II or I2 report. So yeah, essentially that is kind of everything surrounding teaching schools where we are at this stage. The only other kind of funding which previously had audited Annex Gs was TCAF, or otherwise known as the Trust Capacity Fund. However, this funding has now ceased with the DfE, so there should be no more Annex G reporting requirements at this stage, unless they then decide to bring it back in the future. So that's kind of everything from me for teaching schools, Annex Gs, kind of anything like that. But if anyone does has any questions, then please feel free to pop them in the chat. Thanks very much, everyone.
Perfect. Thanks, Steve. Very helpful. So yeah, as I mentioned earlier, I'm just going to move on very briefly just to talk through the DfE's new financial support and oversight for academy trusts guidance, which, like I said, they released at the same time as the ATH back in June. So this guidance is intended to help academy leaders understand how financial oversight of academy trusts will be managed going forwards, and how the Regions Group will support trusts in maintaining financial health and complying with the handbook. So, just a few main themes, really, just the key areas I'm going to go through, and how this can affect your trusts, and what would be deemed suitable actions for yourselves as CFOs. So, firstly, common theme here, like on the handbook earlier, relation to oversight. And it's really just re-emphasising the fact that the Regions Group within the DfE now oversees financial compliance for academy trusts. Therefore, you need to ensure that all financial reporting and compliance processes are aligned with the new Regions Group's expectations. Furthermore, seeing as it is a key area for the DfE currently, there could be further changes in this area. So really what we're saying is just maintaining up-to-date knowledge on this area. So if there is any new changes, can communicate this within your SLTs in a timely manner. Secondly, is the DfE's compliance expectations and reaffirming that trusts follow the handbook and maintain strong financial governance. So nothing new here, they're just kind of re-emphasising the fact, but clearly still worthwhile ensuring that all your financial controls are up to date and monitored on a regular basis. For example, ensuring compliance with your procurement limits and delegated authorities within them. So also continuing to ensure that all submissions are completed prior to the various deadlines throughout the year, in order to uphold strong governance, which Michaela will be touching on the timetable shortly. And then finally, as I mentioned earlier in the handbook section, the DfE have this year again released their new schedule of musts. There's always a good exercise just to go through this, ensuring that all the various aspects have been and continue to be complied with. And last but not least, clarity and governance. So it lays out the clear roles for yourselves as CFOs, along with your trustees, to ensure accountability. So in your roles, important that you continue to provide that clear and accurate financial information to the board and senior leaders, along with any kind of additional extra financial insight you can make, and then the risk analysis. So they're able to rely upon this when making informed decisions. Yeah, so like I said, a real quick run through. It's a useful read just to kind of make sure all the ducks are in a row. And then just leaves me to say, yeah, thanks very much on this. Obviously, any queries, please do ask afterwards or pop it in the Q&A. And I'll pass over to Michaela on the upcoming timetable. Thank you.
Thank you, Matt. Yeah. So all that was summarised in the ATH document that we'll send you after today's meeting. So yeah, that'll be all there in one place for you. So just a reminder on timetables, things to get into your diary, so no deadlines are missed. We've got the up-and-coming Land and Buildings Collection tool. This has had sort of very little comeback from the DfE so far over the years, and no penalties for incorrect or late filing. But we're seeing now more interest in it from the DfE, and so your auditors this year might spend a little time reviewing it, as we've been made aware that there have been some errors in the way that they're being completed. And this is particularly more of a problem if you are a diocese, Matt, really, and therefore do watch out for this area. The date that we put up there, the 5th of November, is estimated. There hasn't been decided yet. It's usually about a week later. So, yeah, once that's decided, we'll obviously put that out in the Academy newswire. The next books there on that slide with the 3 documents in there, the accounts, the management letter or the audit findings report, and the internal scrutiny report, all have the 31st of December 25 date, which I think you'll all be familiar with. And then following that, the Academy accounts return needs to be done in mid-January. Again, that date of the 18th isn't decided as yet, but that's our best estimate of when it will be. Then, as you know, your financial statements need to be put up onto your website by the end of January, which shouldn't be a problem for those of you that are able to sign off before Christmas. And then the large sort of questionnaire, the Schools Resource Management Self-Assessment Tool. Again, our estimate of that date is the 14th of March, but again, not announced as yet, but just worth having something in the diary so you don't miss it. The accounts that need to be filed at Companies House is the normal 9 months after the year end, so the 31st of May. But if I just remind you here that you won't be able to submit these accounts unless your trustees have done their identity checks. And I think we mentioned this in the last forum. All trustees would have had a letter, or your clerk would have had one from Companies House saying that you need to get on with getting all your trustees through the identity checks, because without that, you won't be able to file your accounts or your CSO1 forms. So good to try and get on top of that as and when you have meetings coming up, and to help the trustees through with that sort of .gov site identity information. We then, after that, got the budget forecast return, which only feels like we've just submitted this year's, obviously. So again, we've estimated the date there to be the 27th of August. So that's a long way ahead now. But yeah, just some good dates for your diaries. So just to remind you all, obviously the accounts, the internal scrutiny report, and the BFR all need sign off by your trustees, and the SRMA SA form they need to be consulted on. You can submit them as a CFO. Okay, any questions? Please do put them into the Q&A box. But before I start on the next final slide, I'd like to just do our last poll. And sort of, I want your input really to understand where you are on your sort of green journey, and how we here in this area then compare to the rest of the country. So the question is, does your school have solar panels? Yes or no, or I don't know. Then we can then compare to the norm. So at the moment, 29% going down, but that's still a fair number of people, which is quite good news. Okay, so I'll come back to that when we get to the next bit of my slides. So on to the final slide, we're just going to cover energy bills. We covered this in an Academy Newswire not long ago, but if you missed it, there was a document that was released back in March, and again, we'll send that document to you as part of today's PAG. And there was an announcement that Great British Energy's first project was to put rooftop solar panels on 200 schools and hospitals, and that was their sort of investment in England. And the amount allocated to schools in that was 80 million. And so part of this, the government were to select the schools, but they were obviously going to be primarily clustered in areas of deprivation in the Northeast, West Midlands, and the Northwest. But as well as that, there were going to be 10 schools in each region. So my question to you was, were you one of those lucky schools to be chosen in our region? And the whole idea of this was that the savings that come from this investment could be reinvested back into your school. And the aim was to get the work done by the end of the summer, this summer that's just gone. Um, so it was thought prior to this project that only 20% of schools had solar panels. Obviously, in our poll that we've just done, it came out as 25%. But again, I'm not sure how many schools in our region have taken advantage of this. I'm not aware of any. So if you have, it'd be great to put it in the chat because I'm sure other people might want to share and understand how you managed to get on to this project and how it's gone for you. The average savings per annum are predicted at 25,000. So I think it would be really good for you all to find out how you can get on to the list for next year and for subsequent years, because this is an ongoing project. And it's really the Department of Energy Security and Net Zero that are running this. So do look that up and see whether you can get onto the project if that's something that's in your estate management plan. So onto the SCN white paper. We were expecting that in summer, but it's been delayed to the autumn. And as we know, it was pre-announced that the funding would be looked at, and obviously we know it's more complicated than the normal pupil funding. And so I think everybody is waiting with bated breath to see what funds might be released to assist in this area. No more news on that at the moment. On to the sustainability. Last year we saw the guidance that Academy Trust should have a trustee in charge of this area. And this year there was some more guidance issued in March 25. And again, we'll send that guidance document over as part of today's pack. It's quite a complex area. So can I suggest that you read the guidance and then decide how your Academy Trust is going to tackle this area? And that will involve such things as climate change plans and coordinating with your estates management team. And depending on what the state of your buildings are, what will need to be done in order to move your sustainability forward. I put the charity SORP up on here as well because obviously academies are exempt charities, but they do also have to comply with a charity statement of recommended practice, as well as the Academy Trust Handbook. And so the changes to the charity SORP will affect your first year end August 27. So we've got a couple of years to go. Yep, not expecting anything major to change in the accounts disclosures for Academy Trusts. But it will be finalised in the autumn, and once we know the detail of that, of course, we'll send out a fact sheet to you to let you know what you might need to change. In addition to that, obviously, we've had the Companies Act changes, and the main area of change for you as Academy Trusts, we've spoken about before at other forums, was around lease accounting. So again, that first change comes in for your August 27 year, but the August 26 year forms your comparative, your change that you'll need to reflect in your opening reserves. And therefore, that's a project that you should be looking at, now in this financial year, probably not while you're doing your audit, probably something to put into January, February time, so that you have that information ready when it's needed in the 27 year. In addition to the areas, above on the updates, we shouldn't forget all the changes that are going on in our local councils. They're all tied up with changing the borders, and that's taking a lot of their time. And of course, with recent events with the Labour Party. We could possibly be having a new education secretary if Bridget Phillipson is promoted to deputy PM. So we just need to sort of be mindful of all those sort of future changes. And of course, this year we've had, the move from the SFA to the DFE, which has meant l- less changes really, I think, for the sector because they've all been settling down the change and sorting themselves out internally. And so for the whole of this year, we have had no meetings for the External Auditors Forum this year because there's been no organisation coming from the contact now at DFE. So we're all waiting to see what's going to happen. There's been very little change. So again, I can't see any questions in the chat. So if we could just move on to the final slide, which is just a little bit of a reminder. If you want to sign up for the newswire, it comes out roughly monthly with any changes, and just drop us an mail if you want to be added to that mailing list. And if there are any topics you want us to cover on future forums, please do let us know and we'll try and build that in. The next date we have set for the forum is an in-person event on the 26th of February, and we decided we're going back to Thorndon School for the venue. And then we have 2 online ones on the 23rd of June and the 17th of September. Again, they're on our website if you want to book them now, or otherwise we'll email you nearer the time so that you can then sign up at that point. Last week we did an update for your trustees, and so we've set a date for next year, and that is the 10th of September, again online, again available to book via the website if you wish to do that now, or again we'll remind you near the time. So that just leaves me to say, obviously at the end of the week we will send out the slides, the recording, and links to any of the documents that we've mentioned today, so you can forward them around to your colleagues. I hope the rest of your week goes smoothly, and of course your year-end audits, as well. And if you do need any help, we are here for you should you need us. So I look forward to seeing you all in the new year at the next forum. I'd like to thank you all for attending, and thank you to the HWB speakers as well. Have a good week.